Septic tank. On-property waste treatment plant. There are two types of sewage disposal systems in America. One is the city sewer system, and the other is a septic tank system. The city sewer system runs pipes to homes. When the toilet is flushed, the waste flows to a city wastewater treatment plant. The process of treating waste is managed by civil engineers and involves a flock of microbes which literally eat poop, breaking down the waste. The septic tank uses many of the same principles, but is on the property. It is a tank buried under the ground, and the toilet waste goes to the tank, which is basically filled with sand, and the water passes through and back into the groundwater supply, and the sludge waits to be removed by a tanker truck every so many months. A septic tank is an on-property waste treatment plant. Lessor, property owner, landlord. The lessor is the person who signs a lease to rent a property to a tenant who is the lessee. The lessor may be the property owner or a property manager, but nonetheless is called a landlord. The landlord is the property owner, property manager, but is the lessor because he is the signer of the lease to rent the property to the tenant, parentheses, lessee, end parentheses. Private mortgage insurance, parentheses, PMI, end parentheses. Insurance on low down payment loans for default. Private mortgage insurance, parentheses, PMI, end parentheses, is usually required by conventional lenders on properties purchased with less than 20% down payment. Why? Because with a down payment of less than 20%, data shows that the probability of default becomes statistically more likely. Borrowers pay the insurance premium as part of their monthly payment. The insurance protects the lender in the event of a default by the borrower. Vendor. In a land contract, the seller. A land contract is simply an agreement to sell real property. In a land contract, parentheses, also called land sales contract, conditional sales contract, agreement of sale, contract of sale, installment sales contract, end parentheses, there are two parties to the contract. The vendor, who is the person agreeing to sell the property, and the vendee, the person agreeing to buy the property. The vendor is the seller within a sales contract or land contract. Addendum. Additional documents which become part of a contract. I have a lease for my tenants. At the end of the term of the lease, I simply send them a letter and ask if they would like to extend the term of the lease. If they say yes and sign, the letter says it is an addendum to the original lease, and all matters of the original lease are binding, and that this new letter becomes a part of it too, as an addendum. An addendum is additional documents which become part of the contract too. Appraisal Management Company. Grouping of independent contractor appraisers. Because of the problem of lenders choosing only appraisers who would produce an opinion of market value according to their desires, in 2009, the California Appraisal Management Company law was established. The idea is that an appraisal management company would randomly assign appraisal requests to its independent contractor appraisers, creating a barrier between the client and the appraiser. An appraisal management company, by law, has to have 11 or more appraisers, receive requests for appraisals from one or more clients, and then delegates appraisal assignments to its appraisers. Limited Liability Company, LLC. Combination of corporation and partnership features. A limited liability company, parentheses, LLC, and parentheses, has features both like a corporation and like a partnership. For example, an LLC has to file taxes like a corporation, but profits flow through to the owners like a partnership without the double taxation of a C Corp. A benefit of an LLC, like a corporation, is that it separates assets from its owners, therefore protecting the owners from liability. Unlike corporations, LLCs can define percent ownership separately from investment funds, parentheses, more like a partnership can, and parentheses. In a corporation, one owner putting in $70,000 and the other $30,000 defines ownership as 70-30. An LLC can have the same investment numbers and then define ownership as 50-50. In a corporation, once the investment percentages are established, profits must be distributed accordingly, but an LLC does not have to follow this rule. One more advantage is that an LLC can have multiple classes of stock, providing potentially more flexibility. A corporation cannot. The rules of a corporation are called bylaws. The rules of an LLC is called an operating agreement. An LLC combines some of the best features of a corporation and a partnership. Related words, corporation. Financial intermediary. Takes funds from many sources, then lends for real estate. A financial intermediary is a general term for a lender who makes real estate loans from any number of sources of funds. The process of making a real estate loan as a financial intermediary is called intermediation. The name financial intermediary comes from the middle position of taking funds from different sources and then loaning them to those who need loans for real estate. As a result of the general definition of this phrase, any number of institution types are financial intermediaries, including but not limited to commercial banks, thrifts, savings and loans, savings banks, mutual savings banks, and credit unions. A financial intermediary takes funds from various sources and lends them to those needing real estate loans. Related words, intermediation. Meeting of the minds. Mutual consent. A valid contract requires 4 conditions. A valid contract requires legally competent parties, mutual consent, lawful object, and acceptable (sufficient) consideration. Mutual consent is also called, quote, meeting of the minds, end quote. It means that the parties to the agreement must come to an agreement. Negotiation is the process that often occurs prior to mutual consent or the meeting of the minds. Negotiation has both parties going back and forth with offer and counteroffers until the point of agreement is reached, the meeting of the minds. Possession. Act of using or occupying a real property. There is a phrase that, quote, possession is 9/10 of the law, end quote. In real estate, there are concepts that occupying a property can lead to ownership. There are 3 types of ownership through occupancy or possession: abandonment, adverse possession, and prescription. Abandonment is the concept that if a property is no longer being used and another moves in, over a certain period of time and given specific conditions, the property changes ownership to the person in possession of the property. Adverse possession requires conditions that are commonly said to be possession, adverse and notorious, and continues and uninterrupted for 5 years, hostile to the present owner's title and wishes, and open. Prescription is the process of acquiring an interest in real property through continual use over time, as in an easement. Possession is the act of using or occupying real property.